Live from Music City, Nashville, Tennessee. This is your motivational, sensational, inspirational, educational, aspirational, international, keenly awaited, daily created, highly anticipated edition of the afternoon swing trading floor with your humble host, Jeremy Alexander Newsome, with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. What's going on, folks? I trust everyone is doing majestically and magnificently splendid. Carolyn says, hello from one wet dog to another. That is so funny. Carolyn is saying that because I have self-diagnosed my trading today as trading like a giant pile of wet dog poo. The fresh kinds, not even the old dried up poo. It was a losing day for me. Now, the cool part is, guess what? I'm admitting it. Real life trading. For those of you who've been here before, type in the 1. If this is not the first time that I've had a losing day, let me throw in some 1s because I think everyone who's been here has seen me lose on trades. It happens. In fact, someone once told me that if you trade the stock market, you might lose every now and then. Okay? There will be trades, there will be days where you lose, and here's the takeaway. In every trading day that you lose, there has to be some type of takeaway. The takeaway for me is 2 parts. Every trade that I took would have worked if I had been what? More patient. Spell with a Y, right? More patient. Every trade that I took today, SPY would have worked, PayPal would have worked, and Beyond Meat would have worked. So we're going to go look at all 3 of those trades later and just kind of diagnose what I did, what I could have done better, and what I should have done better. And what I'm going to do is take that information, all right, take that knowledge and apply it tomorrow. So tomorrow I'll have the lessons learned from today, and if all things go well, maybe I'll have a winning day tomorrow. And what if I don't? What if I just go on a massive losing streak and lose the next 9 trades in a row? It is very possible. We'll see if it happens. It's happened before. Doubt it'll happen again, but you never know. So anyway, Leonard says that is only 9% of your account. And Leonard is a smart man. Actually, the funny thing is it's less than that. So I don't use an R that's fully 1% of my account. I do a lot less than that, but you are correct. The point is it's only a percentage, right? Focus on the risk as it stands with a particular trade and approach it from there and be smart. So what we're going to do is we're going to talk about SPY because this is what I look at almost every single day, the broader markets. This was the analysis this morning. So the analysis this morning was SPY either has an amazing bullish run or fades immediately. And what's funny is it actually did both of those things. It faded immediately and then it had a bullish run later in the day. And I'll show you how you could have noticed that. And ironically enough, I'm actually quite happy with how I played the SPY today. I did some back trading. I won't make that same mistake again. And yes, I do think we are going to go higher on the broad markets. I do think we will have new all-time highs again in the very near future. So it doesn't mean it will happen for sure, but we had new all-time highs literally a week ago. So it could certainly happen one more again. This was a very strong gap today, right? Gapping above the high wave of that candle. Remember, we talked about that yesterday. So I said, hey, if it gaps up, I mean, it's going to have a nice run. And I knew that this morning. So what we're going to do is we're going to go in here to a 5-minute chart and just kind of talk about and discuss how I played SPY today and what I could have done better. So I said 5-minute chart. This is actually the 3-minute chart, and I'm going to turn the extended hours on. I don't use extended hours all that often, but I just want to kind of talk about why I think it was valid to use extended hours initially. So this is the pre-market right here, and this is the very first 3-minute candle. Bloop. 3-minute candle comes in, and in my note, I said SPY either runs or fades immediately. So on the second 3-minute candle of the day, you had this bullish high wave candle came in. So when SPY broke that low, which was right here, When that low got taken out, I said, all right, let me see if I can get in. I initially thought that I missed the trade. So we set up a put play to buy puts on the pullback right there with the stop loss right there. And that actually worked out perfect. Everything about that was splendid, sensational, and wonderful. Boom, boom, boom. Now, this is where it kind of started sucking. Right here, I had a target drawn on the stock. And the target that I had drawn on the stock was like this. It was right there, like 298.30 or 298.28, something like that. It's all in the recording, all right? It was the perfect setup, beautiful little spot to exit. I had, we were trading puts on this particular position, and the target that I had for puts was 156, and the option hit 150. It hit my target on the stock, so if I was shorting stock, I would have gotten out, but it did not hit on the option, and so I had to hold. I held and I held and I held, and I exited, I did exit, or we exited 10% of our position right here, so we locked in a very small gain there, and then when it traded up, trade up, trade up, and then this candle came in, I feared turning my winner into a loser, because I had also a realized gain on PayPal, which we will talk about today. And we'll probably go a little bit long today, by the way. So I turned to I was afraid. I was like, oh man, you know, the mental images of turning a loser into a winner and all this stuff started taking place. And so I bailed literally at the high of that candle, almost. So I got out right here for $1.10. And I had bought the options for $1.20. The original stop loss on those options was 90 cents. So we lost very small, and again, we did exit 10% of the positions down here. So with that particular move, I mean, I lost like 0.3 Rs on that trade, which really wasn't bad, but you can see if I had just left my stop, originally it was at 97 cents, which was right there, it would not have stopped out. I will say this, for anyone who knows how I trade, if I would have hit my target right here to get out of a quarter of my position, I would have held. So if a quarter of my position had got taken off right there, I would have held through this retracement because it would not have been nearly as painful. And then when this came in, this came in, this came in, and here's actually the new low that I was looking for. For those who are here live, type in a 7 if you remember me doing a wave count, mentioning that I think we're going to make a new low. That wave count was 1, 2, 3, 4, 5 bounce. That's what I was thinking was going to happen, and we actually did get that. Ironically enough, this was some type of one. So you could draw it like this if you want to. 1, 2, 3, 4, 5. That new low right there. That was the 5th wave. That was the new low on SPY. Also known as, you guys tell me, what's that also known as right there? The ending of that candle, that lower shadow. That is the trap. So right there, you know that someone took it bearish. That is where I would have exited my bearish position, also known as the Admiral Akbar, right? Nice little trap. It's a trap. And then once this candle comes in, once this candle, you get that nice bounce off of that and this beautiful retest, that's when you know to look to be long. And I was, true story, about 19 seconds away from buying this pullback on the E-minis right here. So I was going to buy here with a stop loss there. And I'll show you the E-minis chart in a moment. Got a phone call that I was expecting. So I was expecting the phone call. Didn't take the trade. Insert 5 other excuses. And they missed that little cute futures trade. So all is well. Anyway, that's my story on the SPY. So from here, I do expect this bad boy to slowly continue up. When we take out the high of Friday's candle, it's going to be just a nice little train to profit town for the bulls, I would suspect. Here are the E-minis, and did make some nice gains yesterday / last night, trading the E-minis bullish. And at this particular point in time, my plan for those most likely will be if we pull back to 2996 to look for a long. I don't think we'll get there, but we might. I'm not going to buy a breakout. I'm definitely going to buy pullbacks. So not buying a breakout up here, looking for some type of pullback to get, just in case we get one, and we might. So something around the 2996-ish area is where I will look to go long, because that's where I looked at going long earlier today. 2996 by 2994 was kind of my entry. So I'm going to look for the people who did take that play, who did not get out, to get potentially stopped out on the 2994 and then look to go long. So around that 2994 area on the E-minis is where I'll look to go long if we get there. And if we don't, I won't trade the E-minis until tomorrow morning. Here's the Qs. And the Qs right now having a little bit of a drop post-market because of iRobot. It's a very small gap down, but we are gapping down, very tiny. So we're down 0.3%. A few other gaps out there that matter, and we're going to talk about those. But you did have a small little reaction, a little bit of a gap down on the Qs, and we're kind of slowly recovered. So we'll see what the Qs do. I don't necessarily expect us to gap down below the low of today, tomorrow morning. But I can say, just in case we do, if the Qs open below the low of today, tomorrow, bear city. That would be pretty bearish in my opinion. Doesn't mean it would work, but it means I'll be looking for bearish trades. Because at this point, I'm just letting everyone know, be prepared, write it down when we take out the high of Friday. And it might be later this week or it might be next week. We will have some nice bullish surges out there. So we shall see. All right, so that's the Qs. Here's the Dow Jones ETF, the DIA. And the DIA is down very, very small. But this one, so the DIA has already closed above the high, 27335, 27334. We've already closed above the high of Friday, which was a relatively bearish candle. So expect the DIA to most likely continue bullish from here after some kind of pullback. All right? So that's the Dow Jones ETF. And then here's the IWM, and the IWM is still quite sideways. A little bit of a bullish candle. Actually looks like a new white soldier candle, which I kind of like. It has a 1 penny away from a shaved top candle on the IWM. So it's a little sideways, but more often than not looks slightly bullish on the IWM. This is a bullish candle today. I really do like this shaved top candle, and I would expect us, if we gapped down and broke above the high of those candles, that could be a nice little pop. So I am writing the IWM down as a potential weekly options newsletter candidate for tonight, just in case we get a little bit of a following and a continuation. All right, beautiful stuff, ladies and gentlemen. So here's what we have on the list for today. I'm also going to throw on PayPal somewhere here and Beyond Meat so I can walk you through how I just absolutely just did terrible on both of those trades today. Kelvin says the DOJ opens broad antitrust review of big techs. Stocks dip. Makes sense. Those happen all the time. Unfortunately, / fortunately, I mean, antitrust in the huge, huge companies happen about as frequently as possible. Pete wants me to look at OLLI. I will put that on the list for tomorrow, my good man. We have a jammed-packed session for today. All right, next on the list is Carbon Black, CBLK. Carbon Black, again, what I think is a decent little bullish trend for now. Earnings on Carbon Black are semi around the corner. We're looking at, let's go CBLK. Let me move this out the way. August 1st. So Carbon Black is working on a decent little bullish bounce with what I would refer to as some type of triple bottom down here. Bang, 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 bang. And then it's retested and hanging out. So hanging out at a very clean resistance on Carbon Black. So if you were looking at doing an earnings play on Carbon Black. And we're going to talk about some earnings plays that we talked about yesterday, because 2 of you are up handsomely on iRobot. Carbon Black, gapping up, you could do a $20 call option for September and spend 80 cents. 20 for September. And the reason I'm picking 20 is, in my opinion, if Carbon Black were to gap up here on earnings, there'd be absolutely nothing stopping it, and it would most likely fly high. And you could go in the money, from out of the money to in the money kind of nicely. So both Carbon Black, I'm just throwing it out there. If you were looking at playing it, that could be one thing that you do, and we will figure it out. But other than that, on CBLK, playing it in between now and earnings, obviously you just buy it as low as you can. All right, next on the list is IBM. And IBM had a strong, very strong earnings move recently. So IBM had this huge bullish candle coming in on July 18th. This is the weekly chart that I want to pull up. And the weekly chart on IBM, believe it or not, does have a decent little resistance. So I could draw a support resistance line right about here. And you can see that that has been a nice congestion area for a while and a very pretty higher low on IBM. So IBM could also become a weekly options newsletter contender, as if it rolls back down into this pivot, that could be a little bit of a buying location. I don't know if it happens this week, and it probably won't, but if it does, I think that could be a nice buy low, sell high opportunity on IBM. IBM is a really nice little trade, and if you're looking at playing IBM long term, you could definitely buy some shares down there. Samuel, win, since you're looking at some shares on IBM. You could snag some shares on IBM on that double bottom on a pullback opportunity and kind of approach it from there. Here's your long-term moving averages, and long-term moving averages, you're actually above both of the long-term moving averages. On the weekly chart, here's the monthly, and you are above the long-term monthly chart as well. Now, granted, there is a little bit of a lower trend line coming in on IBM. Looks something like this, and that could be a reason that it will pull back, and I do think that IBM will pull back because that is a nice retest gap on a monthly chart right there. So if IBM pulls back, nice little dip buying opportunity, longer term, IBM with some shares on a swing trade or long-term investment looks pretty okay. Anshul says, Jeremy, are you playing Chipotle tomorrow after today's earnings? We might. We'll see how it gets. We'll see. There will be about 400,000 gaps tomorrow. So we'll have to see what we can find and see what looks good. But yes, I will be in the morning room tomorrow. Now, Acacia. So this one was actually pretty nice. So Acacia Communications, ACIA, the reason we're pulling this one up is because I was keeping a very close eye on Acacia. There's nothing you can do about it now. So the buyout has already happened, at least presently, on Acacia. But look at this beautiful, beautiful retest of the breakout on ACIA. So Acacia Communications, really, really clear support resistance right here. Boom, 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 boom. Massive breakout in this year. So this happened this year, and let me go pull up a chart on Acacia, because we talked about this retest a lot, and this is one that a few traders did snag some shares, right, a small position or potentially a leap on, and those worked out really, really well. So let me kind of come in here. Give me like 9 seconds for this to load. I'm trying to load my ideas that I posted. I don't know why that box is not dropping down. Followed authors. This little drop-down box should drop down. Oh, I guess not. Okay. ACIA. Nice little breakout. And what it did, over here is we'll kind of discuss how a few traders took this position, and then we'll move on because this is already done and there's no way to really make money with this one anymore. Is as it pulled down into this trend line, we said, hey, it's a big breakout. This is a nice retest of old resistance, new support. Look to buy a January $50 call for $5.75. And this little thing right here, this is AB0. That means absolute zero. So that means whatever your risk is, you take your risk and divide it by 575, right? So pretty much able to buy one contract with a $500 risk, knowing that most likely it's not going to go to zero. And the ironic / semi-rare thing happened is once that occurred, Acacia got a buyout order. This was pure luck, by the way. No one here knew that was going to happen. And I'm not being sarcastic. Just awesome luck. And a $50 call at the present moment in time is worth about $16 and some change. So that was really not a bad little turnaround on some longer term call options. Or if you bought some shares down here, those shares also, you're selling those for a really nice profit as well. So Acacia, going off the list, I was really hoping that I'll be able to show you that chart. And I have no idea why I can't. There has to be a way. Give me 9 seconds. I'm going to figure this out. Ideas. That's exactly where I went. So I went to ideas. Let me turn sharing off. I don't think that's going to change anything. But oh, I didn't right click it. That's okay. So come to ideas, because I know I posted a really good chart on Acacia. Ideas published. Why did that other chart not give me that opportunity? All right, so while that's loading, we'll go look at iRobot and talk about earnings on this particular stock and discuss what people are going to be doing on this one. So pulling up the charts, I just want to see what my last chart would be on Acacia. ACIA. Acacia, let's see, what time is it? 4:23 Central, okay. I did not do anything updated on that one, okay. So I was wondering to see if I posted any particular charts on this trade, but we definitely were looking at it for quite some time as a nice little support resistance area channel to kind of buy the dip on. All right, so we're gonna go to iRobot and talk about earnings on this one. Here's the ironic thing. I am gonna keep a very close eye on iRobot tomorrow to potentially fade. Fade means trade higher, okay? So bearish candle gapping down, potentially gonna watch it to trade higher. It doesn't mean that it will, just means that it could. Because iRobot had what I would refer to as pretty decent earnings again. So the Massachusetts company earned 25 cents a share on sales of 260 million. And the analysts were expecting 3 cents a share on sales of 268 million. So they didn't have as many shares, but they didn't sell as many, but they had more cents per share because the stock is lower than it was. And it was not nearly as good as it was last year, this time last year. So this time last year, it was 37 cents a share on sales of 226 million. So the per share amount went down, but again, the amount of money they're actually making went up, which is really interesting. And so this is the second time that I would argue was pretty good earnings again and gapped down again. Now on IRBT, so we talked about this one in depth yesterday for a reason, because a lot of traders are looking at it, a lot of traders have some positions in it, and a few of you did play these July 26th 82.50 put options. So July 26th 82.50 puts. And we'll see what they're going to be valued at tomorrow. But right now, it's opening at about $73. So if you did, and we'll talk about both the straddle and the strangle, but if you did this particular position, right, these are worthless. So $3.50 out the window, gone. So that's going to be your first thought, is you have to realize, okay, you're down $3.50. Now, on the 70, so right now the stock's at $73. how much are the 8250 puts going to be worth at open mathematically? If we open at 73.75, here's how you calculate that. You do the strike price, which is 82.50, and you minus 73.75-ish. 73.75. So approximately $9-ish. So at market open, that's going to be the approximate value of those particular puts. Okay, which is not terrible. Right, so $8.75 or so. Now remember, you paid $1 for those, so that's minus $1.85. So minus 185 minus 350. That would be your actual net return on those options if iRobot actually opens around $73 and doesn't go higher immediately. So let's see, 3. So 875 minus 185 minus 350. So about $3.45 approximately. Okay. So the thing is, right, that's post-market. Between now and when market opens, I'm not entirely sure what iRobot's going to do, but that is how much I'm trading for. Now, this straddle will be much, much more. So this straddle, $92 straddle for July is going to be a little bit more valuable. Okay, so remember, the put options are going to be valuable. The calls are going to be worthless. So if you did a $92 straddle, the calls are going to be at 0. Calls equals 0. And the puts, okay, same kind of thing. You're going to do 92 minus 73.75 approximately, 73.75. And so you invested $1,080, and at market open, if everything stays as equal, they'll be worth about $1,825, those particular contracts. So on the straddle, okay, you would make about $800 if all else equal with the market opening tomorrow. And with the strangle, you would have made about $345. So type in a 1 if that's kind of cool to see, just from yesterday to today. That's how a straddle or strangle would work. If you play these things, you've got to pick a stock that, number 1, is going to gap pretty strongly on earnings. And number 2, you want to buy the options, if possible, at a location where it would be conducive for a stock gap. Meaning you buy the options at a place that the stock is really going to run strongly past a particular level. And that's why, you know, if iRobot had gaps down there, it's going to be pretty bearish. If iRobot had gapped up into here, it would have been pretty bullish. Okay, cool, Jeremy. All that's great. So now what? All right, now that all that's over and we've done some practice on straddles and strangles. The thing is, we're now gapping to 73.74, which is going to be, you know, nothing dramatically low, but relatively low. It'll be the lowest we've been in about a year. So I will be looking for maybe a fade on iRobot. So here's the 3-minute chart. So tomorrow morning, I'm just going to keep an eye out for this. Boom, 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 boom. So maybe a trade down to 69 and some change. It'll be down like 23%, and we'll see if I can look to catch along. We'll find out. We will find out. Okay, so iRobot on the list for tomorrow morning, and I'll be in the morning room tomorrow. I'm going to go ahead and right now write down my plan on iRobot so that I can go ahead and tell myself what I will and will not be doing. So Wednesday morning, wait at least 60 minutes before playing iRobot long. I think it will make a lower low. Now, I could be wrong. What if, Jeremy, you wait 60 minutes and it goes higher? then I missed the trade, and that's okay. Because I can see why we could bounce off here and do this, and then it could trade. But if it does that, it's going to trade back down, and I can catch the bear move, right? So I'm going to wait at least 60 minutes on iRobot. That's going to be my plan, and we're going to see how it works out. Thomas says, if you had those long puts, you could buy shares now and lock in that gain. Very possible. Yep. So anyway, we'll see what iRobot does. We'll figure it out. And that is an earnings gap, strong earnings gap. And the weekly, oh yeah, the weekly 200 is at 69.29. That is where I'll be looking at going long tomorrow on iRobot for a day trade. Hasn't hit that since 2016, and earnings again were pretty solid. So we'll be looking for some longs on iRobot. All right, next on the list is Apple, AAPL. And Apple is smoking. What a beautiful gap this was on Apple. So what we did is we had one day of selling, which was Friday, and then you had a little bit of a gap yesterday, and that was a gap and go, right? Black candle gapping up. And then today was a retest gap on Apple. Just a nice, strong white candle gapping up. Here's the 3-minute chart on Apple, and it took its sweet, sweet time, realistically, because of the first 3 minutes. Right? The very, very first 3-minute candle was a pretty gnarly bearish candle. Right? Pretty big bearish candle in the first 3 minutes. A little bit of a double top right there. Right? Retested the double top and eventually broke down and went lower. Made a new low, and this was kind of the retest, and then eventually ended up bouncing. Tough little stock to day trade today. Plenty of opportunities on it, of course, but it was not the easiest trade in the world if you were aggressive. If you were patient and waited for it to pull back into supports, it was a very nice little trade. I love Apple long term. This is the stock that one of the stocks I'm most bullish on. Type in a 7 if you guys already knew that. We should get 105 sevens. Right? Before I leave, I want to make sure you all know how profitable Apple is. Okay? Just in case you did not know, Apple has enough cash to buy the entire National Football League. The whole thing. They could also buy the entire Major League Baseball. Every stadium, every team. They could also buy the NHL. They could also buy the NBA. Okay, every team, every player, every stadium in cash. And have enough money to buy like 3 Teslas. The company, not the car. All at once. All right? That's how much cash. That's how much cash Apple has. Okay? They're not going anywhere for a very long time. That's all I can say. I mean, in cash, they could do that. So they're buying up companies. Whenever you get dips, buy them, own Apple long term. I think is personally a really wise investment decision for a lot of people. And when this triangle breaks out, and it will at some point, could Apple hit $300 a share by the end of 2021? Of course. JP says, are you a fundamental trader? I'm a little bit of a fundamental trader to a degree. To a degree. I mean, that fundamental analysis is not insanely hard to understand, though. You know, it's just kind of, you just look at it and go, okay, that makes sense. Adrian says, what's the location to buy when it dips? Honestly, man, I mean, 2 weeks ago, back in June. Back in June, a lot of us were going bullish on Apple. Dude, tons of people. So if you can time travel and start trading with me back in June, you'll have Apple at 176. Scott McKay says he bought back that put sale. Congrats, Scott. Well done. Good gain on Apple. Adrian says, that's where I bought. Beautiful. Well, The next location is going to be after earnings. We're going to see what it does. So the next earnings on Apple, I have no idea what they're going to do. Most likely they gap up and fade. All right, that'll be next week. Type in a 9 if you want to trade Apple earnings with me in the afternoon or morning room. Yeah, one of the best Apple traders on the planet, ladies and gentlemen. Okay, so Apple, AAPL, I think it's probably going to gap up and trade down on earnings, but that'll be next week. So in order to trade it next week, you're going to have to be a part of the trading room. You guys already knew that. Hunglau said I had an Apple leap at 180 because you were so bullish. Hooray! All right, cool. So anyway, Apple doing good things, nice gap up, good trends, and we'll see how it opens tomorrow. I mean, depending on how it gaps down tomorrow, it probably will be a little on the bearish side because there's a lot of people who played it. So I could see Apple having a decent pullback tomorrow, down 1 or 2%. I'm not saying it will, but I will watch it tomorrow morning just to see how it gaps, just to see how it opens. Apple, small gap down, slightly bearish. Okay, but slightly bearish meaning just on the day trade, like a quick hedge, make a little bit of money. Now, if earnings gaps down on earnings, if Apple gaps down on earnings, congrats, right? That'll be a beautiful, very, very nice, quick short. So let's say Apple opened here on earnings, it'd have a very nice flush down to 180 and some change, and then longer term, again, nice buying location. The lowest I see Apple going at this particular point in time is probably 160, 150. I mean, in the next 3 to 4 years, I don't see Apple making it back down to these levels. If it does, that's fine. I will just literally let everyone know that it would probably be a semi-wise idea to buy some more. They make too much cash. They're too big to fail right now. They could, again, this is just math. I'll leave Apple in just a moment. They could use their cash to simply do a stock buyback, and guess how much the stock would go up? Mathematically. Just math. If they put in $250 billion into their stock, how much would this go up? If they did nothing but that, it would go up at least 30%, minimum. Minimum. At least 30%. Math, it would just have to. So, and then of course, a lot of other people would jump on board, they'd buy it, all that kind of good stuff. All right, cool. That's my thoughts on Apple. Right on. Next on the list is ALKS, and I want to see if this was doing anything cool. We took a swing trade on this one and made the meagerest of profits on this. And yep, nothing's happening since then. So very, very good exit. ALKS, this is one I'm going to keep a close eye on to see if it gaps up on earnings. No one's talking about this company, and there's no specific reason to. I don't fundamentally know anything about this company at all. But if we gap up on earnings, I think it could be a nice little run. There's a lot of people trying to short this thing. I can just looking at the volume, there's a lot of people who keep trying to short this thing down. And if it gaps up on earnings, I think that bad boy could run. So what I'm going to do is publish a chart on it. Okay. And just mention just in case. Pre-earnings analysis on ALKS. Just in case ALKS gaps up into the green box, I would be very bullish for a day trade and short-term swing. I'm very neutral right now. No clue what it will do on earnings. I don't know. I'm just simply saying if it gaps up and it gets in my box, guess who's going to be buying something that rhymes with shares? What rhymes with shares? Please tell me. More shares. Shares rhymes with shares. Yeah. All right. So that's ALKS. Just a little bit of a, we will see what she does. Okay, it's 4:40. So I'm making pretty good time. I got through Apple in like 7 minutes. Are you guys proud of me? That was pretty quick. Man, impressive. Okay, next on the list is Workday. Let me see your work. So WDAY threw in a little bit of a lower shadow today. I had a lot of people ask me, is this a double top on Workday? While it certainly could be a double top on Workday, I'm not saying it won't be. It did close. Let me see the low of this candle. 212.34. So we did close below the neckline on Workday. We did. So if you're looking at playing it bearish, I mean, this has been an incredibly strong stock. You're going to look for it to retest about 214, and you're just going to have a really quick roll down to 201. Kind of somewhat maybe best case scenario. Most people who are looking at playing Workday are looking at playing it bullish as a pullback into the 200 simple moving average at about 178. So most people who are playing Workday are doing credit spreads, bull put spreads or put sales down here around 170. Samantha says, how do you enter swing trades with shares? After you analyze the charts, do you place an order while the market is still closed? Yes, ma'am, that is correct. That's exactly what we do. So Workday, I don't have any position on Workday. If you want to play this one, it's probably with options, like selling puts, doing a bull put spread, some type of credit spread, because it did have a nice little down day today. A 170 put sale for September brings in about $1.40, which is really not that terrible. It is over earnings, and other than that, that's all I have on Workday. I would like to see it retest. I would love a more bigger pullback on Workday. It's terrible grammar. More bigger. Pretend I didn't say that. But if we don't get a bigger pullback, then we'll just keep waiting. Otherwise, I'm going to let the chart tell me what this is going to do. Because with this lower shadow, if we do get a little bit of a retest tomorrow, and then on Thursday or Friday it keeps going, it's going to just keep on running. Because it's a gorgeous, gorgeous bounce off the 50 moving average. And I don't know if you guys know, but we've never bounced off the 50 moving average before. So since this is the first time that it's happening, we don't really know exactly how to play it because it's never done it before. So since it's here now for the first time ever, if you're looking at playing Workday bullish, right, if it retests tomorrow and then breaks the high of that candle, it most likely will continue. All right, next on the list, let's talk about how I absolutely butchered PayPal today. Butchered a perfect winning trade, like an absolute jagaloon. Oh my gosh. This, oh. All right. Who wants to back trade this with me 10 times? Because that's how many times I'm going to back trade this tonight. How did I lose on this trade? What an idiot. Oh, man. I'm all about that gap, no candle. I'm all about that gap, gap. This was so good. I love this gap. Everything about this gap is absolutely sensational. Look how cute it is. A little bit of a bearish candle, lower shadow. Look at the volume increase. Amazing volume increase. Lower low, lower high, gapping above the high. Oh, geez. Now, here's the best part. All right, I'm going to zoom in on this. Here's the best part. So I did play it aggressively. I played off the 1 minute chart. And so I'm playing it off the 1 minute chart. I got triggered in. And looking at the 1 minute chart, it's a great setup. It's a really good setup trading the 1 minute chart. I mean, entry there. I didn't have a stop there, but that could have been a good play. high wave candle, beautiful trade. So the 1 minute chart looked good, the 2 minute chart looked good. Look at the 3 minute. I should not have played it as aggressively as I did. Taking the 3 minute chart, we would have murdered this thing. So the 3 minute time frame, we would have waited. I would have had an entry there, stop there, never would have filled. And then down here, we would have gone bullish, or down here, somewhere I would have gone bullish. This thing had so much movements on it today. It was so beautiful. And the best part, the place that I did get in, I had a very wide stop. So I got in like there, I had a stop loss down here. If I had been more patient, my stop never would have hit. Now, granted, I normally don't hold a trade that long. Normally don't hold a trade that long, but I would not have gotten stopped out, and I could have gotten back to break even here and or here, and I could have done like an add and reduce here. Now, the question is, why did I not trade it? That's the big question. And here's the answer. I became emotionally invested in the market. I got mad because of what SPY did. Now, whatever excuse you want to make, that's just my excuse. We're allowed to have excuses, but I recognize that I was emotional. And when you recognize that you're just emotional and you're not with it, there will be some times where you might be able to get it back, but usually it's just a downhill slope. Now, what would you rather do, ladies and gentlemen? Would you rather trade with somebody who's open and honest about their losses, or trade with someone who's just going to cover them up and pretend it never happened? I'm going to be transparent. I'm going to hold myself accountable, and I'm going to hold you accountable, because you will have losing trades, okay? It's going to happen. So what I'm going to do tomorrow is this is going to allow me to be more patient. So tomorrow, my takeaway is, like I mentioned earlier, I'm going to wait 3 minutes before I do any trade tomorrow, guaranteed, and I'm going to be a little bit more patient with my stops, and I'm going to see if there's some better trades tomorrow afternoon. Because this was a trade that I could have easily taken, and I actually did see it, and my brain was like, dude, this is a great trade. And I was like, yeah, I know, but I said out loud that I can't trade again. Here was the trade that I saw. Look at this thing. Look at this trap right here. So I noticed this little bad boy. Double bottom, trap, right? This new low, stopping everyone out. Close above the neckline, retest the neckline right there. That's where I would have bought. That is where I would have gotten in right there. And it's just a beautiful, very nice little setup. Now the good news is, every time I lose, this will help you with your losses. Visualize someone you like giving them your money. So guess who I gave my money to today? My girl Angela. I gave Angela my money today because she made money on PayPal. She bought down around that area, down into here. She bought down there because it was, buying low, sell high, and just had better risk reward. So she took that trade, and I love Angela with my whole heart. So I visualized me giving money to Angela and was like, hooray, makes me happier. If you visualize giving money to someone that you like, who's on the other side of that trade, you're like, man, you know what? You outplayed me on that one. Congratulations. Okay. So all good, no big deal. Richard says, Jeremy, I passed on my own written rule and jumped in with you on that one. So since I broke a rule, do I have to do a punishment? Please say no. Well, that's a very good question, Richard. It depends on what the rule is. I don't know what your written rule is, but I would say yes, unfortunately. The thing is, and I appreciate you having the faith in taking that trade, and it does suck that we lost. Trust me, man. I would like to win every trade that I take, but it's not going to happen. I love playing poker, and I also know even if I have pocket aces, there's a chance I'm going to lose on that hand, okay? I go all in, and my buddy calls me with a pair of 10s, and he gets a 10 on the flop, I'm going to lose that hand, most likely. So you could have an incredible trade, incredible setup. Doesn't mean you're going to lose. Or so it doesn't mean you're not going to lose at some point in time. So it really depends on what that exact rule is, Richard. Because I do have about 50 traders that I've worked with in the past, very specific coaching traders, very specific rules. And when I'm looking at a trade, I know that they can't take that because of a certain rule they have in their plan. Right? I know that. I know that they can't take that trade. I have one trader who can't do anything for 30 minutes because he's the most compulsive trader of all time. Or let me rephrase. Sorry, dude. You were the most compulsive trader of all time. Not anymore. So he waits 30 minutes like a pro. Okay? But if I take a trade in the first 30 minutes, I know he can't take that trade with me. Even though he pays to be in the room every day, he has a specific rule. So whatever your rules are, that's the thing, is you're going to want to do your absolute best to follow those. And you can always ask me in the trading room, hey man, I have this rule. What do you think about the trade? And maybe it'll help me frame my perspective. Should have waited 60 more seconds on this trade. Leonard says, sounds like a rule that I need. It is a helpful rule for a lot of traders starting out. Totally agree. Banal says, I lost on Ace K suited 5 out of 5 times once. Woo! That's brutal. See, there's a trader right there who's writing in. Sybil Kramer mentioned, I took the trade with you too. My rule did not let me move my stop, and I ended exiting at break even. Sybil, very proud of you. Congratulations. That is beautiful stuff. All right, that's gorgeous. So Richard, sounds like that answer is yes. I love you, but looks like we're going to be sad pandas together. All right. Leonard says, my swing trades did keep me profitable for today, though. Yeah, agreed. My swing trades are helping me, for sure. So now let's go look at Beyond Meat. And I'm not mad about this one. I've actually already back traded Beyond Meat, and I'm okay with it. I really am. Here's my victory, okay? 10 years ago, guess who's buying right here? Ten years ago, dude, I'm buying all of it. How many shares can I buy at $208? Okay. Now, guess who did not go bullish on Beyond Meat today? All right, so there's a win. Over the last 11 years, at least I learned something. Okay, now, if I come in on a 5-minute chart, sorry. Richard, that is the, oh man. Oh, can I ask in just all kindness and all sincerity, man, are you going to join the trading room? Because you, my friend, are an amazing guy. Richard says, is there anybody in Seattle that needs help moving? Oh, that's your timer. Okay, got you, timer. Hey, man, thank you. So timer, he already trades with me. So timer's in the trading room with me all the time. Richard, got it. He normally goes by timer. So I'm with you now. I'm tracking. Now I know why you're so great. His plan says, his pain is, I have to go to a U-Haul and ask strangers. He's going to help somebody move because he hates moving. That is so funny. Oh, man, that is a terrible pain. Oh, that sounds like something I need to, I'm going to write that one down, man. I'm going to put that in my plan because, geez, that sounds horrible. I'm just going to add that. I'm going to do that as a bet at some point too. That's something else that I do every now and then, ladies and gentlemen, is I have like small little wagers. Like I'll say, okay, I'll take this trade. If the trade doesn't work, I'll do this pain just to remind me that, you know, I need to do it. But Richard, man, I love you. That's amazing. So let me talk about Beyond Meat. When Beyond Meat came down and filled the gap, look how many bearish candles it had in a row. Tons and tons and tons of bearish candles. Boom, 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 boom. So it took out the low. You had loads of selling. You had some buyers, right? Some newbies who were trapped at some all-time highs. So I felt like this would be a good short. So I got in at the pink line, which really is not that bad of a stop loss. Sorry, as an entry. That's, I mean, going back trading, that's a pretty comfortable entry. And I had my stop loss here at the black line. So my entry was a pink line, my stop loss was a black line. And this is whatever. You had a tweezer top come in right here. And when that tweezer top came in, I lowered my stop loss right below. Now, here's the funny thing. I've already actually gone back and listened to my recording. Tracy, do you remember what I said to that tweezer top? Because looking at it now, I'm like, oh, that is so funny. Congratulations, market, you got me. What an absolute baboon. When that tweezer top came in, I said out loud, man, I don't know if I should move my stop right above that because that's going to be a super obvious place to put a stop. Maybe I should just take it to here. And if I had done that, I would have been able to stay in the trade. I would move my, once this bearish candle comes in right here, I'm definitely moving the stop above the high of that candle. So once this candle comes in, I would have certainly moved my stop to there. Put it right there, and then I would have held, and then I would move my stop to there. And then I would have exited here for a gain. And I would have turned a loser into a winner, and it would have been a profitable day. Ah, man, when that happens, I just want to take a watermelon and throw it through a window. Whew. So what you have to do is you have to take that pain, take that knowledge, and take that understanding and apply it to your next trade. So guess who's going to be hella patient with the stop movements and entries tomorrow? This dude. I'm going to be so patient, you guys are going to be mad at me. I might not even take a trade tomorrow. Justin says, do that next time you break your plan. Watermelon through the window. Well, what's good news, man, is I didn't break my plan. I never break my plan. I no longer have exact rules about when I can move my stop and when I can't move my stop. Because here's another thing that I want to make sure you're very clear at. I'm up nicely for the month. I'm up around 13 Rs. So I really am not complaining. I just treat every day as its own day. You know, I really zone in. I'm really just focused in on this. And so I'm really not that upset about it. Today I'm at like 12 Rs because of the loss. But the reason I'm bringing that up, and not trying to brag, really, all I'm saying is the instances that we have traded, I have followed a plan that specifically stipulated if I ever took a trade, I could not do anything for 2 hours. So once I set up the trade and I got filled, I had to walk away for 2 hours. So I'm either winning 2 Rs or I'm losing a full R. I had that for like 2.5 years. So after that, I changed it from 2 hours to an hour, and then now it's about 30 minutes. So at the previous time, it's approximately 30 minutes. So within 30 minutes, my rule is I should know if a trade is going to work or not. I'm allowed to move my stop after 30 minutes. Now I can still move my stop before 30 minutes, but I very rarely do that. I did it on PayPal today to do an add and reduce, and it just simply did not work. So usually about now, it's about 30-minute increments. I do suggest each person here having some rule initially for how long it is before you move your stop. Remember, ladies and gentlemen, it doesn't seem like it, but I've been doing this 11 years. It's a long time. So don't compare yourself to me. It's not fair. Okay, that's like saying, oh man, my kid plays college football. He should be as good as Tom Brady and be making $20 million a year. It's just not the same thing. Like we all have to get to that point in our career. And my whole goal in trading truly is just take it one day at a time, focus on that day, and trade my plan over that week. So as I was mentioning earlier today, yesterday I nailed 0.3R gain, and today realized I'm down 1.3 Rs. All right. So between the 2 days, that is a 1R loss. Ladies and gentlemen, I take one trade tomorrow. I win on that trade. I make more than this 1R. I'll probably just be done for the day. I'll take one trade. If I'm able to, and I can make 1.2 Rs, I'll be up plus 2, and I might just be done for the entire day. And then I'll see if there's a trade Thursday that's worth taking, so on and so forth, right? Just slowly chipping away. Now, if I can get more than 1.2 or the trade begins working immediately and I can be out for 2 Rs or whatever, we'll see. I do have a few swing trades that might play out. You know, we'll have to see. But is that at all beneficial? Is that kind of helpful at all? Ladies and gentlemen? Samuel says, should I be using Robinhood to trade just starting out to save myself on trading fees? You know what, Samuel? I know your age. You mentioned you're about 27, I believe, yesterday. And yeah, Robinhood is actually a great broker to start off your trading with. And I would agree. I think that's smart. There's a few of them now. There is Webull, you have Trade Zero, and you have Robinhood. Now, they're all solidly okay. You get what you pay for, right? So if you get Robinhood Gold, I think you can trade on margin. I don't know if you can short. I don't use Robinhood personally, so I'm not entirely sure. But going long on shares is totally fine. I have a friend, Samuel, who bought some shares of Beyond Meat here in Robinhood and sold those shares today. Want to know how many shares? Ready for this? 6 whole shares. And that was the trader's entire account, right? So very, very small account. Trader's not playing with very much. But it was one of those things I was like, hey, man, you got worse problems, right, than having a $900 account. Okay? You need to focus on growing that first. That's all the money you have to trade with. You got other issues. So let's focus on just learning how to properly trade that and properly invest in it. So he took that trade. He went all in on the position, right? Knowing worst case scenario, if Beyond Meat went to 0, he'd lose $900, right? Which we did not think was going to happen. And at least it did. It wouldn't happen very quickly. Rode the wave, sold today at 200 some change when it made a new high. So made $300 or so. Now he has $1,200. He's going to do the exact same thing on his next trade, whatever that trade is. Maybe he'll text me, right? Maybe he'll ask me what a good trade to take is, but he'll take like $1,200 and he'll take that and he'll go all in on that particular trade. He'll buy shares. In worst case scenario, he'll lose $1,200 if that stock goes to 0, which it won't. Best case, he'll sell it and make a little bit of gains. And he'll just kind of repeat that process for the next few months and years. Okay, so I talk about that in my book. Do you guys, everyone bought my book, right? If you're here, go to Amazon, snag it. It's a good read. It's called Money Grows on Trees. Buy it, read it, you'll like it. The reason I'm bringing it up is I talk about at the end of the book the thought process of don't put all of your eggs in one basket. Okay, because when I told some people that this gentleman put $900 into this trade, and that was all in on his entire account, a lot of you shuddered. It was like, oh, don't do that. Dude, it's $900. If he had $900,000, I would not have let him do that as a coaching student. Okay, but if it's $900, it's like, well, dude, you got to start somewhere. Okay. So number one, when people say don't put all of your eggs in one basket, well, what if the eggs can't break? Okay, I mean, put all of your eggs in one basket if you got easily replaceable eggs. You know, if you got chickens that are just cranking out eggs, no problem, then you can put all of your eggs in one basket or go get more baskets. If those are all of your eggs in that one basket, go figure out a way to get more baskets or figure out a way that those eggs can't break. So what was the likelihood of Beyond Meat going to 0 and this gentleman losing $900? What was the likelihood of that? 0.00000, right? Whatever. Very, 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 very unlikely, especially within the next few weeks. So what is Beyond Meat going to do now? I would wait until earnings. And again, if you're really, really thirsty and you just want some Beyond Meat in your life, I'd buy like 1 or 2 shares at this level, max. Like again, very small position. And if it gaps up, it's going to keep running. And hopefully this thing pulls back down to normal life into the 120s and you can buy a little bit more. I would prefer to buy Beyond Meat on a dip. Okay, so buy as low as you can. If for some reason Beyond Meat gaps up again tomorrow, the edge, as crazy as it's going to sound, is bullish, I would look to trade it bullish, especially if we open above 196.42. So if we gap up again tomorrow, keep on riding that train. Yep, we're going to go a little bit long today. All right, just buckle up, ladies and gentlemen. The trade desk, going very sideways, nothing happening specifically on the trade desk. You have an inside day candle today on the trade desk. Inside day candles represent calmness or rest, a slight indecision, so they could break in either direction, up or down. The direction on trade desk is bullish, and we have a lot of traders with some put sales on the trade desk. Next on the list is Twilio, TWLO, and Twilio doing its thing, trading sideways. Anshul, did you not receive yesterday's recordings, Anshul, in your email? Anshul says no. All right, then email Ashley at reallifetrading.com. You didn't email me at all yesterday. Why'd you not do that? I didn't get one email from you, man. Email me, Jerremy at reallifetrading.com, so I can send you the recordings. Either email me or her, one of the 2 people. I only got like 9 emails yesterday from you guys. I thought I would get a lot more. I'm not busy. You guys realize that, right? This is all I do. I love this stuff. So, yeah, hit me up. Twilio, bullish trends, looks good. Stay bullish. Earnings is around the corner. And if earnings gaps up above 152, it's going to absolutely fly. And if earnings gaps down, depending on how big the gap is, it probably would be a buyable event. So no position on Twilio. If you're bullish, stay bullish. Nothing new right now. It's a little bit too high to get in. Square, ticker symbol SQ. Square is hanging out. So Square, chilling. I did look at it this morning for some trades. I talked about it yesterday that I was going to do that, and I just felt that it was a little bit too choppy. It broke down. I was actually looking at it to go long and never got triggered in, so that's a good thing, I guess. All right, so here's your resistance. Never got triggered in. It did actually, wow, I did not notice that. I don't know how I missed that earlier today. That's funny. So it pulled in perfectly below the pre-market low from yesterday, threw in an amazing trap. Look at that fantastic hammer candle. Man, traded like absolute dog food today. Post 12-hour later dog food. Thomas says, I got the breakout of that hammer. Dude. I'm so happy for you, man. That is an excellent trade. What? Oh. I feel like I should put myself on the endangered species list sometimes. Just like an endangered, white, tall, lanky baboon. All right, Amazon, AMZN. So Amazon having some nice selling post-market from the whole antitrust thing, which is dumb. And again, Amazon, if, and I think specifically when we gap above earnings, it's just going to be an absolute sheer domination. Amazon pre-earnings analysis. Okay. Amazon is down right now with the big 4 because of the DOJ, Department of Justice, antitrust stuff, which will make the gap up on Amazon, if it occurs, even sweeter. This baby will fly if Amazon gaps up above the all-time high, and it will bring the market with it. Okay, just letting you all know right now, that's my thoughts. Full bull on Amazon if it gaps up on earnings. Now, if it gaps down on earnings, I don't know, we'll see. I'm not really specifically expecting that, but find out. Richard's trying to track down somebody to help move, because that is his trading plan. Man, that is so funny, dude. That is one of the greatest trading plan pains I've ever seen. By the way, I had someone say that their trading plan is, their pain for breaking the rules is to watch me and more of my videos. I was like, first of all, bro, so you're saying I'm painful. Okay, number two, that's, come on, man, dang. No, but really number two, I was like, it needs to be an actual pain, okay? Like, if you're watching me is painful, I get it. I'm pretty hideous. I understand. Sorry, ladies. But it needs to be something like physically painful. Okay? Physically painful. OJ says, maybe Jerremy needs help moving his stop loss to a better spot. Dang, man. Oh, what a burn. Oh. Dude, let me give OJ a frequent trader point for the best burn I've gotten in a long time. That is solid. Way to get it done. For the best burn in the room. That's amazing. I will tell everyone right now, in full transparency, I never take offense. So if you're saying something and you're like, oh, I hope I didn't offend Jerremy, that's the least of your concerns, right? I do not take offense ever to anything of all time. So knock yourself out. That was good. That was good. All right, Amazon, let's see if it gaps up. We'll find out. Facebook, ticker symbol FB, same thing. Earnings right around the corner. We're down a little bit right now post-market. And if Facebook gaps up, I actually think Facebook will gap up and then fade, most likely. So we'll come back and look at that tomorrow. And again, I normally don't go this long, but I figured I would want to give as much value to you guys as possible. But I think Facebook will gap up and fade on earnings just because it's gone so high. From 163 to 200, that's $40 any way you slice it. Okay, so we're talking Facebook in the course of 3 months, not even 3 months, has gone up 25%. So if it gaps up 10% on earnings, and we're looking at 31%, I think some people are going to lock in profit. All I can say is do not buy Facebook right here. That would be dumb. Don't be Jerremy circa 2009, 2009, whatever. So this gap up on Facebook, yes, sir. Okay. We'll see. We're gonna look at it tomorrow. I do love Facebook long term. All right, Tesla. So Tesla is gonna be another really fun one to watch. I personally think that Tesla won't gap at all on earnings. That's kind of what I'm hoping for. They're going to be coming out tomorrow, and we'll just have to wait and see. If it does gap up, I'm probably going to fade it, just for that day. If Tesla gaps up, number one, I will celebrate. Number two, I'll make a video for the haters because haters be my motivators. And number 3, I'll fade it for day trade. A gap down, we'll see where it opens. I might also play some puts on Tesla if it gaps down, and that's pretty much about it. So yeah, big gap up on Tesla. I'll probably look to short it. That's why I don't think it's going to gap down. That looks too obvious to me. Too obvious. So it probably gaps down maybe a little bit. I don't know. Let's find out. Tomorrow night, we will see, and I'll come back with some analysis on that. If you're playing Tesla, just know that there are all kinds of real-life traders in bullish on Tesla with all sorts of positions. Most traders have shares and put sales. I don't know personally of any trader that has calls. I'm not saying that none of you have them. I'm just saying I don't know of any trader that has calls specifically. Most traders have shares, you know, collars, put sales. Cool. I think that's the best way to play Tesla. All right, Netflix today, NFLX. So Netflix posted an inside day candle, a very beautiful inside day candle. Yesterday in the afternoon room, I mentioned a 74% chance of that happening today. And I'll be looking for Netflix. If Netflix gaps down tomorrow, ride it bearish. Gaps down tomorrow, bear. I'll play it again. So Netflix gap down, bearish. So you had an inside candle, a perfect rest today with some lower shadows. Here's the hourly chart. And this is, again, adjusting looking at the pre-market and everything. We've taken out this pre-market low on the hourly time frame. We have this pre-market low. We have this pre-market low. So if we gap down tomorrow, it's just going to go down lower. $300 will be an easy target for Netflix tomorrow if it gaps down. Gap up could be pretty bullish. We'll just kind of see. But yeah, there is some supports, and let's put it on Netflix. So long term, I'm bullish on Netflix, but short term, I'd like to go down a little bit lower. Shopify, a lot of people are in Shopify, and it's just hanging out, right? I would be just very cautious playing Shopify bullish. Very similar with Beyond Meat. If you're buying it up here, you're buying it the highest that it's ever been of all time, forever and ever and ever. So if you're doing that, just do it with small size, and I would prefer to buy it cheaper. My buddy Daniel has a put sale at $295 for August week 2, or August week 1, August 2nd. And I mean, in all seriousness, yeah, if Shopify gaps up on earnings, it's going to fly. Robert Falco says it's only trading at a forward PE of 351. Yeah, that's it. That's all it is. Just a nice, simple 351 PE ratio. AKA, it's a little high. Now, I don't need a PE ratio to tell me that, but look at this monthly chart. I mean, come on. Okay. I'm not really loading the boat on Shopify up here. I'm just going to give it a little bit of time. Okay, Snapchat, ticker symbol SNAP. So Snapchat, I'm going to lose an R on Snapchat because I buy puts on Snapchat over earnings. And that has not worked the last 3 earnings, but I will risk an R in order to do so. And so that one you guys don't know about, but I had one buddy text me on Snapchat. And yeah, so Snapchat gapped up. Now, I will say this. I don't think you guys can see this. I won't show the phone number or everything, but I did have a gentleman text me. That gentleman's name is Neil. He says, hey, dude, it's Neil from the chat room. I was very bullish on Snap earnings today and played the stock. Do you recommend tomorrow with a gap up that I sell it open or wait for the retest, blah, 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 blah. So anyway, we were texting each other, all right? You have that opportunity, message me text. And I was like, yeah, man, here's what I would do on Snapchat is look to sell some shares now in the pre-market, post-market trading. And his takeaway was, oh, I didn't know I could do that. Cool. So he locked in a little bit of position in Snapchat post-market, which I think is a very smart thing to do. And what I would do at this particular juncture, his last question now is, for trailing stop, would you only do that during market hours? Correct. I'd be very interested to see how we open. 1631, this could be a very nice little gap on Snapchat. So my thought on this one, Neil, one of two things. We either gap up and just run. Most likely, with this amount of volume, on that gap, the gap down could have been amazing. So I'm really not worried about that R down the tubes. I think we gap up, we trade down, and then we bounce higher. So if I was in that exact position, Neil, which I'm not, but if I were, and you probably don't know how to do these, but I would do a collar. If you know what a collar is, do one of those tomorrow. If you don't know what a collar is, join up, join the trading room, and go watch the Hedging with Options program right now and go learn all about collars. So here's the link that I would like everyone to join. If you want, if you like the trading room, if it's been beneficial to you, and if you think you can make some money doing this, pop over into here and you will get the weekly options newsletter and everything with that link. You'll also get the Hedging with Options course. This is the 4-month package. If you're like, yeah, let me get this for the next 4 months. Pop in, you'll save some solid change. In full, ladies and gentlemen, this is almost exactly how much money I lost today. Almost exactly. It's kind of funny. So the thing is, if you're trading with any decent size account, you can make this back. The opportunities are easily there, okay? This could be in one day. And anyway, it's there. If you want it, there's the link. And what I'll do is I'll include all of the links that are right here in the chat pane. We got the monthly. So here's this is the for the 4-month, right? So let me just kind of copy. I didn't mean to do that. I'm gonna copy this link. If you want to do the yearly, you're welcome to do the yearly, but there's the links. And yeah, give it a shot. So I would do a collar, Neil, on Snapchat tomorrow. With the amount of shares that you purchase, you're able to do that, and that'll be great. All right, ticker symbol SOLY, Solution Incorporated. I had a trader from Australia, James, played SOLY. This was the setup that we talked about yesterday in the afternoon portion of the morning room. He wanted to get in bullish above that candle, and so I helped him with this particular setup. 1406 by 1349. I didn't personally take that trade, but James did, and he made enough money to pay for the trading room. That particular setup, check it out. That is a 2.5R setup, ladies and gentlemen, right there. Feel free to go back into yesterday's morning room. It was around 11:30 Central, 12:30 Eastern when I made that call out for James. And he asked me about the trade. I set the trade up for him. I sent him the link. I said, hey, here you go. Here's how I would play it. And he snagged 2.5 Rs, and that was a beautiful, beautiful trade. With a $500 risk unit, that is well over $1,000, ladies and gentlemen. Alice says, where did we learn about the Rs? Numerous places, Miss Alice. Numerous places. Place number 1, you can go to the free tab and click on Trading for Beginners. It's in class number 2. And if you want an article, I'll give you an article right now for just that. And you can read all about it because it's mind-blowing and amazing. So anyway, James, congratulations on SOLY. Nice trade. And it does seem that it's gapping up very, very small post-market right now. I'm really looking at that one just for James. However, I don't think we need to look at it just for him. There's a really good opportunity building on this bad boy if it does start rocking and rolling. So what I'm going to do is start planning it because this thing is interacting with the 100 simple moving average, and it does have a little bit of a bullish trend. So depending on what SOLY does tomorrow, we're going to come back and look at this one in the afternoon room tomorrow and see how we can play it. Okay. Next on the list is EA Sports. It's in the game. EA. Oh, look at this inside candle. I did not expect that. So yesterday I drew the pink lines. I said, hey, we could go one direction or another. Now, tomorrow, we're really going to go one direction or another if we gap, right? I'm watching it to see how we gap on EA. I'm going to put it on my list again tomorrow morning, just in case. You had an inside candle, high wave candle yesterday, followed by another inside candle today. This will break in one direction or another. And if it gaps up tomorrow, it could be a nice little bullish pop. JL has a put sale for August, and we'll see if EA does anything special. Next on the list is a swing trade that we are already in as a team. Ticker symbol LK. So on LK, this is a swing trade that we are already in. So if you're looking at this trade and you're like, man, I want to get in, I mean, awesome. It really was a great trade, but you're not going to be able to get in with the exact same way that we got in. This was the trade set up on LK from a few days ago. Just a few days ago. 2049 by 1896. That was the setup. And it broke out, it pulled back, and it bounced. So it broke out and gapped up yesterday and had a very, very nice continuation today. So here's the cool part. If LK hits my target tomorrow, which it probably won't, it probably will wait another 2-3 days, maybe a week or two. But if it goes up another $1 tomorrow, I will exit at 24.58, and that'll be about a 3R trade. So again, talking about the losses today, if I have a 3R win on LK in the next week, all the losses are erased, boom, back to green. That's the thing, ladies and gentlemen. You got to have the ability to take these trades. There's no need to be worried. Sometimes you win, sometimes you lose. What we've done on LK at this point is we've exited 10% of our position, middle of the day, and we've increased our stop from 1896 to 1945. Now, just because you're not in it doesn't mean you've totally missed this trade. There actually is a really good opportunity for this thing to dip and then continue a little bit higher. So keep LK on your list. All I'm going to do is trail the stops. I'm not going to get back into a trade or do an add and reduce or anything on LK. I know most of you probably are not in, and if you're not, that's okay, but a lot of us at Real Life Trading are. So my target on this one will be 24.58 to exit everything. Okay. Next on the list is AMD. AMD, beautiful gap today. Look for this to continue over the next 2 or 3 days. This is a very pretty pennant pattern. And we had a gap up today, and we closed above all of the highs. And there's the smallest of upper shadows on AMD. Now, I know earnings is next week, so this will probably be a day trade. My buddy Scott McKay has a covered call expiring this week, which will most likely expire in the money. He will get called away, and there will be 0 tears that fall from his eyes. Right now, AMD is in a bullish trend. Don't look to be a bear on it. Look to be a bull. Buy dips. Gorgeous little gap. Nice move on AMD. Okay, we have 5 left, and then we will be done. Upwork, UPWK. Now, this trade is one that I might have exited early. I was allowed to do it because I've been in this trade for an entire month. So that's the way that it works for me, is if I do exit a trade early, meaning before it hits target and before I get trailed out, I have to be in that trade for a decent period of time. We've been in this trade since this day right here. So this day was specifically June 21st. Today is July 23rd. That's a month. Now, it could continue higher, but the reason I exited and took this trade off the table for a small profit is because it took so dang long. That's pretty much why. Number 2, I was losing on the day. And if I closed this trade, it would reduce my losses. That's pretty much it. Now, I could have taken the stop and trailed the stop, right? Absolutely could have done that. And right now we're gapping up 10 cents on Upwork post-market, so a very small gap up. So I could have taken my stop and just put it right there, but I just decided to exit, take a small win, very small, meager win on Upwork, and reduce my overall risk exposure in the market and reduce my risk. So if you are still in Upwork, I would simply say have your stop below the low of yesterday's candle and look to have a target around 1778. For a long-term investment, this realistically could be a decent trade, especially if you're an entrepreneur or a business owner. Upwork could be a really decent way for you to get paid to do the things that you already do. So be an owner, not just a consumer. Don't just use Upwork, but invest in the company and get some returns on the downside. This is a really good stock. I do like it. I do like how they make money. I do understand their business model, and it's not very expensive. So you could dabble in a small position, few shares, good volume, and just hold it until it potentially goes higher maybe, and see what it goes from there. But I do like Upwork on a little bit longer term scale. Now, UTX. UTX had a very pretty gap today, and I forget who brought this one to my attention, but that particular gentleman was asking me intraday during the class if he should buy UTX here at 133, right below the low of this shadow. And my answer to him was yes. Yes, I think you should. So nice little buy spot, nice little exhaustion volume, exhaustion candle, and that was pretty much it. Really good little dip location on UTX. So this one is going to be potentially a weekly options newsletter play that I'll be sending out in about 30 minutes. But I'm looking at UTX to retest and then bounce. We're going to keep an eye on this one. This was an earnings gap today. It is a very, very nice little gap. I really do like the volume. And the reason I like it so much is because we opened above the high of this candle. So if UTX breaks out of here, you could have a nice little run. So I'm going to put this as a potential weekly options play, but you're welcome to watch this one for shares as well, because I do like this little move on UTX. CCL, also known as Carnival, had a little bit of a bullish gap up today. The low of this candle was 44.79. The low of this candle was 44.76. I was hoping the low of this candle would be just a little bit lower, but I do like this one white soldier nature of Carnival. And I believe I've attempted to do a swing trade on Carnival not too long ago. This is the monthly chart on Carnival, and you can see it's kind of resting at the 100 simple on the monthly chart. So in that, with that analysis, it's a very, very interesting gap. I'd like to buy it lower, but I'm trying to decide if I should wait for this candle to get taken out. So yeah, let me do that. Let me just plan this trade, because I would like to buy Carnival as low as possible. This one could be a long-term investment as well for some of you out there. If you like Carnival, if you like taking cruises, if you go on Carnival cruises, it's at a nice long-term level, buy low, sell high. And I'm gonna keep a very, very close eye on this one as either a double bottom for a longer term play, or maybe a pullback into a support for just a quick little investment. So Carnival is gonna go on the list for Transportation Thursday. We'll come back to Carnival and see how we can play it. Two more, and then we'll be done. DVA Healthcare, very cute gap up the other day. Very nice inside candle today. And what I'm trying to decide is if this stock moves enough to warrant a swing trade, and I think it does. So DVA, nice gap and go, inside candle. Let me pull up the hourly chart. So I really would like to buy this as low as possible. I'm almost willing to do like half an hour and half an hour, and then a little bit of a lower stop. That's already $3. So I don't think I'm gonna get it much cheaper than that. So what I'm trying to debate is if I should take a breakout of DVA That's 59 and some change. Or let it break out and then retest the next day. And that's what I'm thinking. So what I'm going to do is we're going to definitely come back to DVA tomorrow. And if it doesn't trigger tomorrow, then I'll do a breakout. If it does pop tomorrow, then I will try to catch the pullback on it. Pull back into like 59.21 or something. So it is a really nice gap. The daily chart looks good. Very, very small candle. Could be a really nice runner based on that gap action. Gap action. So we're going to see if it does something like this. Because, I mean, just looking at that gap, realistically, and this is just, you know, my opinion.
I'm a classic gap. Look at me, no candles on the screen. I'm a classic gap.
That's how I crush the club. Hope you guys know that. That's exactly what it looks like. People come running. All right, DVA. We're going to come back and look at this one tomorrow. What do we got? DVA on the list. And next, last but not least, Boeing, ticker symbol BA. Boeing, we will see how it reports on earnings tomorrow morning. I mean, I would not imagine if Boeing gapped up to here that it would not be remotely bullish. And that's all I have to say about Boeing. I'll put it on the list. I'll watch it tomorrow. But if Boeing is gapping up into this 390 zone, it could be a decent bullish trade on Boeing. So Wednesday morning, I'm just going to look at it to see what it's doing. All right, folks, that was a lot. Hefty review. I know I went a little bit long, but I hope you found it at least somewhat valuable. And we still got a lot more coming. So tomorrow is Energy Wednesday. Here's the stocks that I already have listed. Natural gas futures, tomorrow, LCI, Halliburton, OLLI, Facebook, ExxonMobil, XON, SOLY, DVA. Okay, anything else you guys want to look at tomorrow? Adobe's have been a bullish trend. Chevron, XLE, yeah, we look at XLE pretty often. JP Morgan, of course, we'll look at Tesla. BP is already on the list, John. Dry ships, nice. XOP, so we got a lot of X's. XON, XOM, XOP, Caterpillar, Maxar Therapeutics, Johnson & Johnson, United Health Group. All right. Sounds good, team. I'll see you tomorrow. Same time, same place. And until then, remember, love life, live life, and trade it. You rock.